I can hear you, Coach, loud and clear.
Check. All right.
Check.
Should be able to hear me now. I think we can hear Coach Paul. It's what happens when your
Go
software
ahead.
needs to do an update 10 minutes before you run a session. But hopefully, you all can hear me now. Welcome to At the Buzzer, our market recap. If this is your first time here, I'm Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. If this is our first time meeting, I am Coach Jay, been a Top Step performance coach since June of 2023, been trading for the past 13 years and in the futures markets for the past 6, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, Coach Jay. I'm Coach Paul. I've been with Top Step since April of 2023. And I've been involved in the futures industry for 4 decades, um, mostly trading. And I'm here to share some experiences, maybe bring some knowledge, and help you become a better trader.
Awesome. Thank you for that, Coach. And happy Monday to all of our viewers. Thank you all for joining us today. Let us know how you did in the chat, if you were up on the day, down on the day, anything that you learned from the day. From Jen and John says, please talk a little bit about handling greed and being content. Thank you, guys. We can bring that up for sure. We'll get into that. But we got Dan up 1,500 on a new 50K combine times two. I see a lot of maybe we can talk about this a little bit. I see a lot of combines getting passed with that consistency target as a goal, coach.
Yeah.
I see a lot of traders. Oh,
Yeah.
I did 1,500 in a combine. I did 3,000 in a combine. I did 4,500 in a combine. What do you think when you see that, coach?
Well, if the combine, there was then, first of all, there was opportunity to do it directionally and with volatility. It's hard to do in a very tight market. So if you get on the right side, you have that, but you have a very good chance of passing combines. Um, and that's good analysis. The problem comes when you're expecting that when you're wrong. So when we talk about this all the time, and there was a great question in here about can you talk about greed and being content? It comes with that. Is executing a plan, as we've heard this all the time, with risk management in mind. And I think when you have big numbers on days that fit in your plan, that's the expectation. Right. The key is understanding when sometimes you have I won't a losing day, you really didn't follow your plan because you didn't want to take the loss. So, um, I'm with the kind of ranges we've been having, I think a lot of people are going to pass combines quickly, but can you keep it? Can you make the same good decisions when the market's going against you? We've been doing this for a long time, Coach Jay. Me, these days only come 20% at a time. Now, if you've been in trading long enough, it's that other 20% that other 80%, whether you're trying to scratch or make a little money or lose a little money and avoid blowing out. So, good job. Your plan worked. Is it repeatable? When you have quick moves like we had this morning, that can that can happen. Yes. Now we talk about consistency. Can you do that consistently by following the rules, or do you fall to fear or greed? And we'll go more into that later in the show.
Sure. Why are we ripping right now? I don't know. Trump's call with Trudeau went very well. When asked if the tariffs are going into effect tonight, he said, "Watch."
Drama he's a master of drama.
He said, "Watch." That's amazing. Let's get into the markets a little bit. So we do know we didn't have much as far as planned news goes this morning. We did have the uh, S&P manufacturing PMI numbers come out. ISM manufacturing PMI numbers come out as well. Um, but in the season that we've been in, planned news is taking a backseat to unplanned headlines. We talked a little bit about this last week, and today's unplanned headline was Mexico's president Scheinbaum saying that the tariffs that were announced for the U.S. and Mexico are going to be delayed until next month. We know that the tariff news was a lot of the reason we saw the market sell off. We opened up with a gap last night for Globex Open with the announcement of a bunch of tariffs. It's almost so much, it's kind of hard to keep up with how many tariffs are being announced right now. But then, if that's what brings us down and the news of delays of those tariffs is announced, then we see the markets kind of uh, reverse some of that move. Anything you got on the news front, Coach?
Yeah, we just talked about it, and I'll just remind you, these are truly chaotic times. There is, when I hear market abhors uncertainty, as a trader, that kind of shapes me. Like, what do you mean? It's all we get is uncertainty as a trader. Investors abhor uncertainty, but what we have here is chaos. Anything can happen at any given moment, and you have to be prepared for that. How? What can you control? Your entry and your exit, and how much you're willing to risk on any trade. We talk about it. Pare down because the volatility's here, and it can come at any moment's notice. So that's the news. It's going to happen at any time. We've been saying this since day one. I, I think it's a little more than even I expected. So pare down, stay in the game. Don't get sloppy. Even a bit, forgetting to put a stop in or forgetting to cancel a stop that didn't get filled. Those things, keep checking. We don't talk about this, but check your order book. Make sure
Make sure
there's
you're not
not
leaving anything out
orders that
there.
are, those things will haunt you in markets that are this chaotic. So there's a new routine, and we don't talk about it before, is staying clean, clear. Um, Anything you leave, you need to check before you shut it down. Do I have some orders working? Because errors in this environment can also blow you. There's things that with this kind of chaos that you don't even think of. So double check, be clean, and pare down a little on your size. Take your trades. Don't be afraid. Just size up right.
I was just gonna say that to finish that point off. Don't be afraid, right? DT just asked, so how do we trade ranges equals chaos? I'm already trading micros. Trade the markets, right? Trade your setups, because what can happen is, we don't know that this unplanned headline is coming out. I didn't know this was coming out. I was actually short a couple of micros before this move because my setup said to trade it. But what I do know is that there's potential for an uncertain headline to come out at any given time. So even if I want my profit target to be 200 points lower, I'm going to secure some of the profits along the way as the trade works out. Now, does that mean I trail my stop? Does that mean I trade multiple micros and then I'm scaling out of the position as when I can? When it and I'm I don't want to scale out of a Nasdaq micro position 2 points in the profit because that I'm you know picking up pennies. But at some point, I'm going to say, okay, there's uncertainty out here. There's a potential for a headline to come out. I don't know when it's going to come out. So if the market's willing to present profits to me, whether that be 15 points, 20 points on the NASDAQ, I'm going to secure that. We saw Dakota do that today as well. I saw Nick Vertick talking about it in his VIP chat as well. It's just, in these conditions, when the market presents something to me, I'm going to take it, right? And if it presents more, right? If I'm looking to get long, if my strategy says get long at the bottom of this consolidation, right? Or at the bottom of this range here. Let's say my strategy told me to get in at 21,120 in, let's say I had a limit buy there. and then in 30 seconds I'm up 200 points, I'm taking something off the table. I don't care if my target is 400 points up. It gave me what I was expecting, probably 50 times faster than I was expecting it. I did my job. Sometimes when you're good, you get a little lucky. Um, and that's it, right? Do I Am I, if the market runs another 200 points, am I upset if I didn't catch the move? No. It presented profits to me quicker. I'm going to take it off the table and then can reassess. Some people want to wait for this volatility to step in, right? From a volume perspective, you could do that as well. Um, but like Coach said, don't be afraid. Just don't be over leveraged, because if you are short in here and you're over leveraged and you're already sweating the position before this happens, this move is going to kill you. Go ahead, Coach. What were you saying?
Every time you do that roundhouse knockout punch
It's
by
coming.
Tyson, I think I gotta get a copy of that just so I see that, or when I get sloppy. Oh, maybe no. You have to protect for that because you just said it'll come in seconds. 200. I want 400. It, in a moment, that could be you could be down 100. Um, so that's what I talk about. Don't get Someone was talking about don't get greedy. That's a greedy thought. Um, and then one other question I want to add to that was you bring that is where should I put my stops? Behind structure. My feeling and my experience is I put my stops to where I can afford when I what I can afford when I enter the trade. Because that's the only thing I can control. What can I afford? Because that is the number one imperative is to stay alive and take risk that when the trade isn't working, I'm not fighting an emotional battle of should I, shouldn't I? No, we talk about I accepted it and this is what I could afford. It gets this price. I'm out because I've sized my bet versus I'm gonna out I'm gonna out trick the market. That's you can sometimes, but my experience is when it doesn't work over time. But can I afford to do that? It should be the number one thing when you enter the trade. That's part of the process.
100%. Uh, Real quick, before we start getting too deep into the charts, let's go over the top percentage movers on the day. There are 35 different markets we can trade with Top Step accounts, not just the equities. And today, to the downside, we had Platinum down 4.06%. Lean Hogs was actually a limit down today at one point, down 4.43%. And Micro Ethereum futures down 18% for our biggest percentage mover to the downside. Most of that was
Wow.
a gap. I don't know if anyone has ever traded micro Ethereum futures. It's like 5 cents a tick. Um, you can trade multiple contracts of it, but we saw Ethereum, Bitcoin take some pretty big hits. So micro Ethereum down 18%. To the upside today, we had RBOB gasoline futures up 2.22%, heating oil up 2.38%, and natural gas, our biggest percentage mover to the upside, at 9.95%. To talk about our big four, we had gold up 0.68%, making a new all-time high, crude oil up 0.33%, and then we had S&Ps and Nasdaq are always hiding. S&P's down 0.43% and the Nasdaq down 0.4%. To round out our big four, I'm going to switch back over to an equities chart. Saying down 0.4% after yesterday's open. It's kind of just like a regular day. We were down almost 3% yesterday. Everyone was talking about, what are the limit down prices, which I think limit down, limit up prices are good to know, good to have an idea of, once we, limit down for the equities or the limits for the equities, 7%. So in top step accounts, you're going to want to stop trading around 5%. Uh, Not to say that we're going to get one of those, but uh, in the past year and a half, this is some of the most volatility that we've seen. Uh, and we get close every once in a while, right? this gap obviously got filled, but last week we saw a continuation of it, right? So just be aware if you look at a quote board, if you look at the markets and it's saying, we're close to down that 5%, just be aware because we're going to start locking up positions at that point.
Yeah. And here's the thing: as a day trader, you can't get caught in a limit position. You're because the clearinghouse is just going to get rid of you. You can't because there you have a position overnight that you can't
Right,
get out of.
right.
Um, so understand that that's not anything you ever want to get near. You might think, oh, do you? I don't know if anyone was ever been caught in a limit. It doesn't happen that often. Uh, um,
Stock limits I've got caught in.
yeah, don't don't even
Not
play
fun.
around that area.
Not fun.
So no.
It's fun when it opens up and it keeps going in your favor. I've got caught in a few halts in stocks, but when it's not going your way, it is not fun at all. All you want to do is get out. Um, so yeah,
And you
stay away
can't.
from that, and you can't. And you can't. All right. So looking at last night's open, we know we had this gap down. Here's a 30-minute chart on the Nasdaq. I'll pull up Coach Paul's moving averages as well. We gapped down. Well, yesterday, Friday, where we closed was right on that 200 moving average on the Nasdaq. We gapped down below that, kind of testing into that same Sunday gap. These gaps are starting to look like natural gas, Coach. Where we
Yeah,
just
hey, I was just gonna say that. And Bitcoin.
open up with a Sunday gap on the equities. Uh, this one, yes, we haven't filled it yet. We're close to it, uh, but not closed yet. But we gapped down, and really no continuation after that, right? Again, the gap here was a lot of the news that we heard over the weekend. The markets finally get a chance to react to them. We made a low on that open, and really from that point we continued up. Um, my first trade was a short looking for some continuation. We didn't really get it. Got stopped out, and that was my trade for the night. But really, no continuation on that selling. From that point, we just filled that imbalance and then tried to fill the gap. What are you seeing here on this equity chart, Coach?
Volatility. Look at the size of that first candle. What was this?
See, 200 points? Nope,
200
250
points.
points after gapping down 400.
All right. So it's down 650 at one point. So okay, the initial imbalance, I call that. Now, was that a buying or selling candle
Selling. This one here, selling.
on the volume? It was just selling, but
Yep,
that's our biggest volume right there. And we've talked. So when we anchor that VWAP, what are we looking for? To come out of that initial range. And it took what, hours, right?
took it took until the it took until Mexico saying we're delaying tariffs. That really brought us out of that range, right? That brought volume out of the range. Um,
Okay. And it did bring it out and it held.
yep,
So just, it's one thing about using volume would help with some kind of idea. In this situation, we have just price action. It's not really huge volume. It's just pure fear of the
yep,
from the headline.
exactly.
But we didn't get continuation in prices, and volume remained steady to low. So there was no follow through. Interesting. When the first volume came in, we even by then we had short covering
Yep,
or bargain buying, whatever you want to call it. There was what buying, and just before that news announcement, it broke out of the range. So just understanding that volume right there can help you alleviate bad losses or stay in a good trade.
yep.
I don't know, through my experience, when you have those huge gaps, you're like, oh, is it buying or? what do I do with it? But you get defined there if you're patient enough.
Just comments from Canada's PM Trudeau: delay in U.S. tariffs for 30 days. So maybe we get to back to normal trading for 30 days here. Just keep it on your calendar. 30 days puts us somewhere around uh, March 7th, somewhere around there. First week of March, second week of March. Then we can get back to these Sunday gaps. Unless, of course, some more tariffs get announced for whatever reason. Stay tuned. Stay tuned. I feel like I'm watching House of Cards.
Oh yeah, it does. Very good.
Feel like I'm watching House of Cards. But here we go. Here's the open. I think Dakota and I both came into this kind of looking for some continuation of a short. And I think today was a perfect example of, maybe having an expectation, but then seeing how the market aligns with that idea. Once this volume came in, this was a decent long opportunity. And this is, where as a momentum trader, sometimes I think wait for this move, because then it helps to more clearly define a trade where I'm not looking to maybe get in at this low here, but we've seen what this urgency move looks like, right? Where off of the headline, and I don't know when those headlines are going to come out, but we even framed out one of these trades last week, where this could have been tariffs. This could have been, hey, just, people want to buy these markets. When this volume comes in and I frame a VWAP to that, that gives me some opportunities for trades, right? VWAP left this range early. This could have been a 3-minute opening range. This could have been any trade, right? It's the same DNA, just with a different catalyst, right? We talk about all the time, news expedites the move. We had some news, but the technical pattern is still the same. Saying that, was not happy about missing this trade right here on a pullback to volume. With we got a pretty nice bounce from there, about 100-point bounce from there. So if I'm reviewing my trades today, I got to figure out why I didn't take this one here. But from a technical perspective, it's the same exact trade. Outside of that, the New York session was a big range, between 21,450, we'll call it, and 21,400. We got pretty tight, maybe 350 and 450. So 100-point range, you can still trade it, but volume died under that moving average and price ranged around. At this point, I locked myself up and said I'm not trading for the rest of the day. And we can see we're breaking out of that range just now, with the markets looking like they were waiting for this conversation between Trump and Trudeau, which was on the calendar from this morning. Anything else you got on this chart, Coach? Coach, I think you're on mute.
I'll do my push-ups after the show.
There we go.
We had that roguish selling volume in the middle of your chart.
This was a man. Yes, it was. To answer your question, yes.
All right. Tune in tomorrow and we'll go over the J trade. And we have to use some suspense, Coach. We'll go over why that is a great. Well, that's a repeatable trade.
Yep. Yeah. Here's one here as well. Maybe not the most convincing. What I really like about this one, we just kept testing the low of that range, right? Dakota and I were actually talking on Slack while we were on Fast Markets, and it was like, we tried to buy it, right? Initially, we tried to buy, and the one thing I didn't like about this trade, and so we had Friday's high and then today's low. We're looking to trade the breakout here of 50% of that range. We took the trade. We had to trade about 20 points in our favor, but we didn't see convincing enough buying to get above that. And I didn't love that trade. But we were talking about it and saying, hey, we both still really like the long idea, but maybe either the timing or location is wrong. And I think, reviewing this trade, if we were going to take it, it couldn't be for a breakout. We had to wait for a failed selling. And if we look at that, right, there's two really big examples of failed selling on this chart, and they both stopped at the same exact price. There's one right here,
Yeah.
and there's one right here, right? Those were the opportunities to buy, looking for, this potential move up, because this helps limit risk, right? Once sellers come in, they execute a ton of volume and show that they cannot push price lower. This is where I want to try to get into a trade. Maybe not exactly at the low, but I can limit my risk below those lows. And that's what we needed to wait for. And we would have had to wait all day, but it was the right idea. Just the execution of that trade had to be very specific, I think.
Yeah, but it's there. And actually, you said it's a good lean.
Yep.
It's a trade I call leaning. You have a well defined. You just size it up, but it's a repeatable pattern. And just go through just the principles of that. Heavy selling can't take out the buying that occurred on the opening. So
Right.
if they can't, how much time it's almost seems like an algorithm to me.
Yep.
It's almost the same exact volume done in the same range. So that selling can't change the direction.
Right.
Two things are going to happen. If it's bad selling, how do we know that? Well, we'll just look we put in a VWAP when that happened, and then we see when it breaks out of the range. When when it gets above, especially when it closes above that candle, all those sellers are wrong.
Yep.
Why they sold, I don't know, but it's selling. They can't change the direction. That's something to pay attention to. We refer to it as the J trade.
There we go. Really nice example there. And we're continuing to push. Nasdaq finally closed that gap. Let's just take a quick look at the S&Ps. S&Ps closed the gap as well, up here at 6060. So, hey guys, nothing happened. Back to our regularly scheduled program. These are just buy the dip opportunities until, of course, something changes. But for now, buy the dips. That's not financial advice. That's maybe not even educational. It's a little bit of a joke, but really that's what it is, right? Remember what caused this dip. We're hearing news that those are going to be delayed. So what else would the markets do but trade to the upside? Like Andrew said, nothing to see here. Move along. Uh, all right.
Until something else comes along.
Exactly. Let's take a look at gold here. So we have gold from last night's open as well.
Oh
Here's
my
that
God.
range. Uh, Decent sell opportunity initially. I didn't really look at gold much, but we got this 2800 level here. I actually did want to take a short, and fast markets I never took. But
Okay.
go ahead, coach.
We talked about greed before. Someone wanted us, I'm going to go on day trades. For this example,
Hmm.
this broke out of the range relatively early, like but the third or fourth. Now,
Yep.
we've talked about objective. If you can get 1-to-1, 2-to-1 risk reward on a day trade, that is a very reason. That's a nice return. But greed would say, "Fuck this! It's done." Oh, excuse me.
Yes, it's okay.
I'm not going to let this thing run. And then it comes back, and you tell me you've done this in the audience. It comes back to where you're scratched now.
Yep.
Okay, well, you had 2-to-1. The thing is, at least maybe I'm just talking I have to be different. I swing trade too,
Hmm.
but day trade, you
Different
get two
brain.
to one. Guess what? You can put that in your pocket and look for another setup. It might not, it might come in gold. It might come in S&Ps, but that was a great. You just said it was a great sell there.
Yeah. Yeah,
It,
really,
it,
really
it-
nice sell. The tariff news, of course, is going to affect pretty much all the markets that we trade. We sell initially. Um, News expedites the move, though. You had a 2-to-1, like Coach just said. Um, but what's that white
and you're
line down
doing
there,
it.
Coach?
You're doing it against the trend. The trend
Yep.
being the 200 bar. So that's another thing.
Yeah.
You know, you got 2 to 1 against the trend. y- You're a good trader. Take it.
Yeah. Take it.
Yeah.
And don't get
Here's a,
greedy, right? Now is not the time to be greedy. You were gonna say something, Coach. Go ahead before I go into that.
you know, but two things. If it got to 200 moving average,
Hmm.
why wouldn't you just cover and see if it holds it?
At least move your
Because
stop into profit.
yeah,
At least, right?
or if you want to buy it, let's just get out. I like buying against the 200.
Hmm.
What's my risk? So it gets there, and did it even close below it? Let's just say I did it on a price. Oh, that's a J trade. Is it? Well, that because it's not really big volume,
Not really big volume. This is a Coach
but it
Paul
has.
trade. Buy it against the 200 moving average and call it a day.
So the first time it gets there, I risk 2 ATRs. Do I get hit?
Two ATRs, 16 points. No, way out of the way. Do you get it?
1600? No, but I could do micros.
$160.
Yep, maybe. That's wow. That's how volatile that is. That's on a micro on a one lot. Let's just go there. I got risk that. I get 2 to 1. Do I get that?
Oh yeah, you got 2 to 1 halfway through this move. Uh, yeah, yep, yes, 2 to 1
Yep.
with a one lot,
Oh,
$3,200 on a mini, $320 with one micro. I was talking to a trader today in the Discord chat, and back to this greed conversation, um, where this trader's has an XFA that's struggling, looking to, and it still has some drawdown, so it's definitely recoverable. But then in the same message saying, the profit that I see with 1 to 3 micros isn't enough. Uh, and I had to ask the question, and hopefully the trader doesn't mind me saying this, and hopefully you're watching. We had the conversation in Discord, but we all have to think, for where we sit in our trading, did I earn the right to say that? Right? Did I earn the right to say that, oh, I have to trade more size? Um, that's a greed thing talking, right? We're talking about a one lot move here, and maybe your trade plan doesn't facilitate, this big of a move. But this is just a one lot micro that could have made you $320, and that's one trade on the day, right? And I see some traders saying it in the chat. I tried to make an extra $300 and then I lost it. I think we really got to wrap our minds around some of the money that's being moved around, and maybe not treat it so much like a game, with a reset button, especially with trading the combines and XFAs, where if you can make $200, sometimes I feel like it's easy to just brush it off because of how quickly it can happen, right? If I put on a one lot mini in the Nasdaq, I can make $200 before I take my next breath, right? So it feels like it's a lot easier than it is. Uh, I think we all have to have a little bit more respect for the money that you can potentially make here, and then you'll make a lot more. 250 trading days in a year. Uh, 250 trading days in a year. There are 229 days left, I believe.
coach, I just want to go and just coach. Let's say you have $150,000 combine.
Mhm.
Okay, you're a trader.
Yep,
How much do you have to risk?
4,500.
$4,500. So I'm going in percentages. If you returned $320 on a gold micro,
Mhm. It's 10%,
what's your
a little less than
what
10%.
in what period of time?
This is a 9 hours. 9 hours here. We're talking about for this trade.
Okay, let's get but the percentage in that time.
Right.
See, this is where greed is expecting that's not enough for me. I want to make 100% on my account, and I've been victim to this. I'm not.
Same
I,
here.
okay, it takes out any consideration for how much I could lose. And the more I do that, the more probability is I'm going to blow up. It's management, risk, taking too much risk. By the way, that's just a micro gold. You could maybe find a similar opportunity for your if you have a solid trading plan. The you can use that in 135 different places.
Yep.
What are the odds of getting that same trade in the same place in one day? And so I can appreciate why people that's not enough because if I'm losing 300 on my losers and I'm making 350, that truly isn't enough. I understand that.
Right.
But I think staying in one market looking for that opportunity, I understand why you would feel that that's not enough because I'm losing that much. My theory is find that trade. Look at a few different markets because you're looking for that trade. I'm not going to master. I've been around. No one I have ever seen, and I've been around a long time, has ever mastered one market. Market makers, because they're always getting an edge, they're guaranteed, but you're not a market maker. So I, this is a great discussion. Expecting to get that, if you miss it and you're in one market, that's a shitty feeling. Like,
Yep.
then we start forcing it. But I understand that 300. Wow, that's a nice trade. Risk to reward. That was a great trade. My my experience is, I'm telling you, on a day trade 2 to 1, that's what it is. It's reasonable. It's reasonable that you can continue to do that.
Yep.
So thanks for asking that question. It's a really good question. And I hope this is helping people understand that you're trading money at the bottom line. You're not trading anything out. You're trading the money in your account. So
Right.
try to realize like you make 10%, you lose 3. You make another 8%, you lose 2. Cut your losses, let your winners go.
Yep.
That's the bottom line. It's so easy to say, and I think it's just hard to execute.
Uh, Steve asked, had all green days last week, decided to try to increase to 2 or 3 minis this week. Today was a personal daily loss limit. When do you decide to increase size? I'm going to take this completely off the charts for a minute. My my younger brother likes playing pickleball, right? And I was like, I'll go with him a couple of times to go play. And the place that he goes to, he's been playing with some people that have been playing for years. I didn't even know pickleball was around this long, but these people have been playing for a very long time. So I went with him the other day, and we signed up. We played on the intermediate court. I'm playing. I'm like, oh, you know,
King of the world.
watching these people up, coach. I'm just like, These people can't play." I'm like, "Okay, so let's go over to the challenge courts," is what they call them afterwards. And there's a woman sitting over there, and she looked like she was in her mid 50s. She's sitting there hanging out, and she's just like, "Oh, you want to come over here and play on the challenge courts?" I'm like, "Yeah, I just want to see what a challenge is like." First game we play, I'm like, "All right." I serve. We go back and forth, a couple rallies. They score the point, but it's pickleball, so they don't get a point. Now we give it over to them. They serve. First serves comes to us. I send it back. I rush the net, and I'm getting hit in the face with the ball. And it happened so quick, I couldn't even move my hands to figure out what the hell happened. And the dude that was playing against me was in his 60s.
Uh,
I scaled up too fast. What are you
yeah.
doing on this court? Right? I'm playing against people who have been in this game for a very long time, know all the rules, and understand how the game is played. And my false sense of confidence led me to go over there and say, you know what, I'm going to go play now. Guess where I went after that? Take my ass off this court. I'm going to go back to the other courts where I can still learn this game, right? Don't be in such a rush to scale up. Now, here's the thing. I appreciate the fact that I did that because you do have to know what the game is like if you ideally want to get to that space. But as soon as I got off that court, I said, I can't go back over there until I win 5 games in a row on these courts decisively, right? Because I need to learn how this game works. It's the same thing with trading. You had a week of good trading. Congratulations, all green days. I don't think anyone here is trading with the intentions of just trading good for a week and then calling it done. Yes, I won the championship. That's it. Right. A lot of when we talk to traders about what their goals are here, it's I want to trade to replace an income. I want to trade to feed my family. I want to trade so I can leave my job. That's not a 1 week thing, right? You need to have the confidence in the fact that you can do something repeatedly over an extended period of time, right? A week of really good results and then scaling up to 2 or 3 minis where you're either 2x or 3xing your size is a monetary based decision. And it's probably because you want to expedite your results a little faster for a reason. Address why that is, right? And again, back to the point we made before, don't neglect the money that you can make with trading the size you were trading. Uh, it's going to take a little bit longer to get to your goals, but you might get there a little quicker. Um, so don't be in a rush, please.
Great example, coach. That is so true.
Man, that hurt.
That hurt. But and you know what? You can feel it as a trader. It's like, okay, I'm just gonna go tomorrow. I got it down. I'm gonna start trading 5 lots and then in the mini.
Yeah.
And the first trade is beyond what you expected. Um, or maybe it is, but that's 5 times the risk. It's I it's not a one-to-one relationship. Psychologically. Build it up. I like someone here. I start with 5 micros and then add another 5 and or, add to a winner. Okay, that's scaling up with some control. But even to do that, you have to have some experience, right? And
Yep.
build your way up to it. Maybe you start with 2 micros, add 3 micros
Hmm.
to a winner. And we were talked about Friday. You could have been up big time, and 3 minutes later, you've given it all back. And if you freeze, you just blew the account.
Yep.
That happened Friday on some erroneous. It's not on some news that is not expected. It's intense. So when you're heck, right now, focus on sizing down because the ranges are bigger when you're winning.
Yep.
And you can't survive them if you're too big. So right now, I love it. I have 2, 3 micros, plenty.
Oh yeah.
Because if you get that extended, how much easier is it to trade? It's psychologically when your risk is controllable or comfortable. There's an old saying: trade down to where you can sleep at night.
Yep.
Trade down the size that you can afford, comfortably afford a swing that you're not that if something happens in literally what minutes you,
Right.
and you didn't put the stop in or you got too big of and you freeze like oh fuck when it comes back when I was with Coach Jack today but the old story is oh man if it just comes back to even and then the people who are not even religious are praying to God, let me out. I promise,
Right.
right? I happened to me one time, and a friend of mine, an older trader, looked at me and he knew. Shared this story on Discord. He knew right away looking at me. It must have been the pale color of my skin. I was like down way more than I had intended. And he looked at me, he goes, "You're stuck, aren't you?" And I'm like, Yeah." And he goes, "Right now, and it looks like you're praying to God just to let you out." He goes, "Hey, God's perfect. That means he's on the other side of your trade and he's not letting you out." So I don't want to ever, when I heard that, I don't ever want to be in that position again. Um, and this can happen real quick. So we're
Yep.
talking back to greed and under control, take money that is probable, right? The 2 to 1 boom, 2 to 1 here with these extended with an ATR.
Are big moves. They're big moves. They're big
Yeah,
moves.
eat, eat
Yep.
what you can. It's there. That's why I think that question even comes up in it, right? It's greedy. I mean, it's just a matter of minutes, like Friday or today. Like, whoop, I couldn't afford to get in with that, but I wanted to risk it because I want to make money. That's a philosophy that's it's very dangerous. Staying in, taking 2 to 1s. Um, you can survive this and actually thrive.
100%. We got some questions here. How does gold compare to the ES? Is it as volatile as the Nasdaq, or is it more calm like the ES? I'd say it's probably a little closer to the ES than it is gold. Sorry, than it is the Nasdaq, where we're not usually seeing the today during the Nasdaq. I don't know if anyone watches the depth of market. There were times where there was a 12 tick spread in the Nasdaq. That's insane. And most people are not. Dakota did it, right? He looked at the depth of market and he's just like, "Whoa, that spread's a little too wide for me to be trading right now," right? Where if you get in at the market, you're already down 3 points in the Nasdaq, which is, you know, uh, who wants to start off, that far behind the starting line, right? Gold is a little more liquid than the Nasdaq would be. Um, and maybe not as whipsawy. It's a really nice instrument to trade. What would you say, Coach? Nick Fortick, who had fun today? Nick Fortick had a great trading day today. I know that. And then I also saw Nick Fortick say to his VIPs, "Make your money and lock it up. I'm not going to sit around all day waiting for opportunities. I make my money and I'm getting away from here." What would you say
Hands
about
down.
the difference between gold and the equities, Coach?
Um, I think it all comes down to the size you're trading. I like micro gold against the S&P. Measure it out. You know, let's look at the ATR of a half hour in the S&Ps.
In the S&Ps during the New York session, 20 points.
20 points, $1,000. Wow. Let's see the same thing in the gold.
8 points.
8 points, 800. They're about
Yep.
the same, and so how does that match up to your equity? Is what I ask. I think they're about the same.
Mm.
I think from my experience, gold can get really choppy for longer than I can afford to hang around. But then when it goes like it
Then it
did
goes.
on Thursday,
Oh yeah, just
that's
went.
what you're playing for. But I think they're about the same. Is really what I'm saying.
There we go.
I love Richard Harris said, "Boring market is my thing." That all right. That's sometimes and that's a very good point. Sometimes we come into this for the excitement of it.
Yeah.
And we're coming here to make money. How whether it's a boring market or you just want to do it, excitement can, speed kills too.
Yes, it
All
does.
that I don't want to jump into a NASCAR race because I've done it on on my computer. Um, but yeah, that's a great point. And you know what? It tells me Richard Harris understands personality.
Yep. Yep.
And we talk about gold and S&Ps. Match them, trade them small to find out, if they work with you. Some people think it has to be Nasdaq when I, how many times have we heard this is fucking Nasdaq? I hate it, but I keep trading it. Where you might find something gold is better, works for you, or corn, or Dow. We hear this all the time. It could be in the yen. Um, so that's a great point. Thanks for bringing that up, Richard. Trade what you can, so you can execute it.
Yep.
I mean, I don't trade the mini Nasdaq anymore. It's just too expensive for my. And I know I have it's it's like I can't afford to be wrong. Well, if you can't afford to be wrong,
Can't
you
trade it.
can't afford to be in it.
Right. Nick Fortick said he made all his money on the ES today for what it was worth. Makes a lot of sense. Trading in a live account, probably saw that 8 to 12 tick spread at any given point. It was just like, you know what? There's a better market for my trades. So be aware. Doesn't always have to be the Nasdaq. It's going to be what you hear talked about the most because most of our traders trade it. But that doesn't always have to be the case, right? We could have a ton of successful traders trading the S&Ps, the Russell, gold. Find a market that resonates with you and helps you facilitate your account. All right, couple questions we got here. We didn't go over crude oil either, so we'll go through that. But would it be better to trade at night to escape the news and the tweets? Well, let's see. If I'm looking at the equities, this happened last night, this gap down. And we've seen Dakota lock up his account because a headline about tariffs came out during slow markets. You're not going to avoid it. I'll say it that way, right? If you are trying to avoid when these times are, maybe trade during the London session, where a lot of the news that we're seeing is coming out of either the Asian session or during New York. So maybe trading at 3 a.m. Eastern, you can try to avoid some of those headlines. But like we said before, right? Don't be afraid. Just trade small enough with a stop that, and just continue to trade your setups. But if you're looking to avoid tweets and headlines, maybe the London session. But even then, anything is possible. Or
Yeah,
trade corn.
or trade nights are. You have a good point. Nights, at less they have less range, but it doesn't mean you're completely safe from a wild tweet. Doesn't mean that, so don't assume that. But it is more. You can handle it more. It's less. Look at the average true range is lower. Yeah, it's a little. It's less risky, but it's not complete. I mean,
It's not risk free.
it's not risk, and it's riskier than it used to be. Or do it, a coach who lean hogs, live cattle, and the grains.
No
And
stress.
he's right. They've been great markets.
No stress. And it sounds like a joke, and you're not gonna hear anyone talk about it on Topstep TV or whatever it is, but you might go over there and find that you're a lot less stressed. Still, there's no certainty there, right? We're not saying that you're gonna go over to trading wheat or corn and all of a sudden be a successful trader because some of the same principles apply regardless of the market that you're trading, right? You can't just go over to corn and say, "Oh, it's a slower market, so I'm gonna trade 15 contracts," because you can still get your pockets picked, like Coach Jack said uh, last week. Uh, any tips for helping to refine or optimize my strategy, like thoughts on variables to look for and tweak over time to gauge results, and if they make the strategy better or worse? Samson, it's kind of a loaded question because we would need to know what your strategy is, right? If you are a buy and hold type of intraday trader where you're looking at a 4-hour chart to make your decisions, I'm not going to make many suggestions on trading volume or momentum, right? So it really depends. I think if you're at the point where you're optimizing your strategy, I almost suggest to people that if you're at the point where you're optimizing, you probably know enough about your strategy that you don't need to add anything else. You just need to execute what you already know.
I would add one of those two is position sizing. Your strategy might be the answer. Is optimizing a strategy. We think that we keep. I would say four. Right, my experience is four different variables that go into your decision to enter risk, not a trade. Let's just call it risk. Um, four. What happens is the more variables, the more perfection we're looking for. The more perfection we look for, a non-perfect world, we can
Mhm.
miss a lot of trades. And what we're really doing is not accepting the risk.
Yep.
And we talk about it with accepting the risk, is sizing right. Once it's really important to understand accepting the risk, and you can make the trade because you can exit well. So I think as a tip, and I've done it, I've back tested trading for some things for 10 years. And there's always, you can always go back and go, well, I want to make this perfect, do a Monte Carlo simulation. All this is to avoid to go, okay, how do I get in? What is my risk? That's which is my exit. My exit over time, a large sample size needs to be greater than my exits need to be winners need to be bigger than the losers.
Yep. Good stuff. Good conversation today. Good conversation today. There's another question here from Hanti. We got a couple of questions actually. How do I use time in sales? I'm just using it to see the kind of pace of the market. I look at it like a heartbeat, right? Is there follow through some of the levels based on the pace of time in sales? Uh, I know you look at volume for your trades. Are there any indicators that can tell you something about price proactively instead of one being reactive to price action? Um, I think if you want to be proactive, there are volume patterns, and I've said this before, but volume can be a class in its own. Um, this is actually a really good volume volume pattern. Now, I know I might be cherry picking this example, but this is let's- volume dips and volume valleys. And again, shout out to my mentor Rich Lepis for teaching me this. But this is what we're going to consider a valley, right? Where volume is consistently lower. It's the middle of the day where we know to a high probability is going to be a lower volume session. This is a valley. In volume valleys, I'm not looking for trending moves, right? I'm looking for range bound markets because the probability of follow through is a lot less. This I'm calling a volume dip where we had decreasing volume, decreasing volume, decreasing volume, but the probability, because of the time of day, the probability of volume coming in is higher. Now, we talked a little bit about invalidation of volume. Price is going lower, but what is volume doing? It's going lower also, right? So when you see something like this is a dip. The potential for volume to come in at some point is still pretty high because of the time of day. Um, I don't want to. This was an example from today. We'll look at a couple of more of these because they do happen uh, pretty frequently. But when you see volume start to kind of wane like this, but we're still in a high volume time, there's the potential for the volume to step in and do something, right? It's not always going to be to the upside. It's not always a reversal, but we've seen a couple of these examples over the last couple of days where we have price moving, volume doesn't confirm that move, and then we get a move in the opposite direction. So, but again, that could be its own class. Coach, you got anything else before we go? We got about a minute here. I think we just need to extend the session right into 4:30, and then we just send everybody over to Coach Hoop. Anything else before we go, Coach?
No, as we've been saying all year, um, understand the chaos and um, just bring your size down, rein it in a little bit. The When you do that, you can hold on to bigger trades. I don't mean, but you can't hang on. The losers become bigger. Of a- so be size down. That's it.
Awesome. For all crude traders, we didn't go through crude, but it was kind of a roller coaster today as well. Hopefully you survived it. Hopefully you managed your risk. Crude had a really nice pop and then a sell off, but we'll talk a little bit more about that tomorrow. We're going to go ahead and end it there. Remember, we have classes in Discord. Coach Hoop, Coach Ray, Coach Vince do classes at night. Coach Hoop coming up in 15 minutes. Coach Ray at 6 p.m. Central. Coach Vince at 7 p.m. Of course, we have Dakota with Slow Markets at 7:30 on YouTube. Coach Jack also does a session in Discord now every Monday and Thursday. That's going to be at 11 a.m. Central Time. Of course, we have Deanna with the London Open at 3:30. Ton of content out there for you on the YouTube and Discord for Topstep. If you can't catch it live on YouTube, you can always watch the replay. Nick Fortick with the Sunday Open. Sorry, Nick had to be the first one on Topstep to deal with those markets gapping down 2%.
Yes,
But he
he
prepared
did.
us for the week and he traded really well through it. So good start to the week, Nick. I got nothing else. Trade well, manage your risk. We will see you all tomorrow. Thanks. Bye.
Bye.